a great question. I think that if you're betting on Gemini, you're really betting on this future convergence of Wall Street and digital assets. And the reason maybe your prior guest described it as lower quality, and obviously, people can debate, is the historical financials really since the 2022, we can call it a meltdown of digital assets, haven't been as strong as other exchanges and other businesses. Now, I think that the reason I say if you're interested in Gemini, it's a bet on the future is because you're looking at probably the Nasdaq partnership, the tokenization of equities, what that could all mean for the convergence. And what that could mean really for this forward outlook for Gemini. So I think that's probably the things you have to bet on here. And obviously markets are forward looking, and that's really the key to underwriting this one.
There are lots of ways to play that convergence, it would seem to me, right? And we've seen that convergence increasingly between Wall Street and crypto. What is that sort of landscape? Where are we in that evolution? And what is the future of that, and how can people invest in it?
Yeah, something we say quite often is that crypto is having its internet 1995 moment. And if you remember, Netscape went public, and Wall Street was really able to take these internet companies, they could bank them, they could back them, they could take them public, they could collect fees on them and write research on them. And that really put the machine behind, financing this wave of internet growth. And we think that we're in a similar period with the digital asset industry, following a lot of the regulatory changes that have happened that have allowed for Wall Street to both adopt on-chain and use the technology to become more efficient, but also to take these businesses and really help them find capital. So I think we're in the very early stages over this long-term trend of that growth. And there's going to be a lot of interesting companies that we think are coming to market that people will definitely look at. And they perform pretty well, the recent ones as well. So that's creating more appetite.
It's pretty fascinating that you choose that 1995 internet, because what happened after that? You got the dot-com bubble, right? And you got a burst. You had too much investment, one could argue, too much enthusiasm, frothy valuations, and then the sort of fallout from that. And yes, of course, many strong companies survived that, but many did not. Do you expect that kind of a similar shakeout at a certain point in the business?
Well, I think as a liquid investor, you're always talking time horizons, right? So if you're going from 1995 to the 2000s, and then even in 2010, right, you ended higher on a bigger plateau in terms of market cap relative to the total equity market than 1995. So yeah, I think there's opportunities to be made and money to be made across this cycle. And obviously, it's about managing risk. You have